Here's the reality check. Just because the steps look simple doesn't mean the execution is. Many investors report running into funding and rehab hurdles that can completely derail a deal. The BRRRR cycle depends on everything going according to plan, not with just the property itself, but with your financing, your contractors, your timeline, and the rental market. If any of those pieces don't work out, you can end up stuck, unable to move on to the next property, or even worse, losing money on the deal. You find a fixer-upper in a promising neighborhood, the numbers look good, and you're confident that you can add value with some updates and renovations. Buy the property, start the renovations, things seem to be moving along pretty well, but maybe the rehab takes longer than expected, or the costs start to climb. Unexpected plumbing issues, city permits, or delays with the contractors. Now you're over budget and behind schedule. Once the work is finally done, you list the property for rent, but it sits on the market longer than you planned, or you have to drop the rent to attract tenants. Your projected cash flow shrinks. The appraiser doesn't value the property as high as you hoped, or maybe lending standards have tightened since you started. This happens a lot. You can't pull out as much cash as you put in, or you're stuck with a higher interest rate. Suddenly, the whole repeat step is out of reach. Instead of rolling your money into a new project or a new house, you're left with less cash than you started with, and a property that's barely breaking even.